Yo, what's going on, stock market investors? Welcome back to the channel. My name is Jason, and today I want to talk about where will SoFi stock be 1 year from now. Pretty much everyone on YouTube and on the internet who's been predicting SoFi stock prices over the last 2 years has been completely wrong. It's been a surprise to me that we've been trading flat or down over the past 2 years while the rest of the market continues to go up. Will that last forever? I'm not really sure, but I came across this article that was really interesting. They talk about the same thing. Where will SoFi stock be in 1 year? Because the company is doing really well, and I'll show you what the article points out, all the great things Anthony Noto and the company have been doing over the past few years, but the stock is considerably down from all-time highs. We're trading in the mid $8 range right now, but at one point a few years ago, we were in the 20s. So a lot of SoFi investors are either underwater or flat or slightly up. If you bought in that mid to $6 range that we were all telling you to buy at, that's great because you're up around 20 to 30% right now. But I think there's much more to go for SoFi stock. Let's break down this article and see how well the company is executing and where the stock price could potentially go over the next few years. Real quick, let's take a look at SoFi stock. Up about 2% today. We were up pretty big early in the morning, up to 858, but we've sold off in the afternoon. All right, not too bad, up around 2% today. For the week, we're up about 6%. For the last month, 17%, which is great. 3 months up 30%, even better. But year to date, we're still down 13%, right? Well, the majority of the market, even index funds, are up in that 17 to 25% range. So, the cost of doing business with SoFi is hurting a lot of investors. In this little baby account, I have 230 shares, average price around $7.42. Look, over the last year, we're up a little bit. 5 years, we're down considerably. We peaked into the 20s twice. We hit that $22, $23 top, and then we've sold off considerably for the last going on 3 years, guys. So SoFi stock, there's no other way around it. It's been dead money, but are the next 3 years going to be better? Let's check out this article. All right, SoFi investors, here is the article from The Motley Fool. It's written by Jennifer Sybil, so let's see what she has to say about SoFi. She kind of introduces SoFi stock and saying that after a big run up last year, the stock's been trading kind of flat, and that kind of surprised her. So she's going to go into each and every category of like where she thinks SoFi is doing well as a company, even though the stock price may not reflect that. She starts with engagement, and that's increasing, right? She goes over, this combination has attracted millions of members at a fast-growing rate. Members increased 41% year over year to 8.8 million in the second quarter, with products up 36%. And if you go into their investor presentation, we can see all this, guys. Like, here is the members right here. We're almost at 8.8 million members, and we're pretty much adding around 600,000 new members every single quarter for the last, year and a half, 2 years. There's been some better and there's been some worse, but, 600,000, another 600,000, another 600,000, you know what I mean? We're pretty much gaining around 600K. That's great if we can keep that up. That means by the end of the year, we're going to have over 10 million SoFi members. And the more members that are depositing into the savings account that recently just got cut from 4.5% to 4.3% is still at the top of the class, right? Especially because they have such a great suite of other products that if I get like 0.25% less at SoFi, I'm going to keep my money there just because I like their platform. And I think a lot of other investors will agree. I don't think there's going to be a lot of yield chasing for 0.25% or 0.1% or something crazy like that. And then if we go down the products, that's steadily increasing too. And as we can see, over the last 2 years or so, we're steadily increasing year over year growth between 40 and 50%. It's kind of coming down, so we'll have to see where that goes in Q3 of 2024. If this downward trajectory continues, if we can stay in that 25 to 35% range moving forward, I think that's going to be great for Sofi stock. Now, let's go back to the article where she's talking about the lending segment improving, right? Lending is the main segment by far, accounting for 55% of the total revenue in the second quarter. Although that percentage is getting less and less because Sofi is offering new and better, more enticing products to its members, right? So that 50-50 balance of lending and the other segments could be great for the company moving forward. And look, Anthony Noto and the company, we could see by the investor presentation here, with lending and financial services, lending has gotten a little bit flat this past year. And that was because the uncertainty with interest rates and the economy. Anthony Noto erred on the side of caution and wanted to be a little more conservative with lending. But as interest rates come down and the job market continues to be strong, the numbers came out pretty good last week. So that's a great sign moving forward that we won't necessarily get into a big recession. Could there be a mild recession? Of course, that could always happen. But as long as unemployment stays in that 4-ish% range and GDP is still positive, people aren't losing their jobs, and interest rates continue to go down at a slow and moderate pace, I think Sofi is in a great position to capitalize on all the deposits so they can start to send out and issue more loans, right? I think what's going to happen now is a refinance revolution. I think a lot of mortgages are going to get refied once they start dropping into that 4-ish% range. And I also think a lot of people that were stuck with really good 3% mortgages to 4% mortgages are going to want to move to another place, either upgrading or downgrading, and take out a new mortgage. To leave a 3% mortgage for a 7% mortgage makes no sense. So a lot of people felt like they were held captive by the low interest rates. And as they come down, there's going to be some more flexibility in the real estate markets. And I think that's really going to benefit Sofi, especially because they just got a new mortgage company in Wyndham Capital. So that's another segment of this business model. So people are going to refinance high interest rate debt, whether it's credit cards or personal loans, at lower rates. And that's going to go with the same for mortgages, right? So I'm very excited about that part of the business, right? This article also talks about revenue steadily climbing. And I agree with that. Net revenue increased 20% year over year in the second quarter. Management is guiding for 20% rise in the third quarter and 18% for the full year. And that's with being very conservative with lending, right? But if we take a look at Yahoo Finance, we can see the revenue annually is crazy. $565 million in 2020, up to $970 million in 2021, up to $1.5 billion in revenue in 2022, and $2 billion in 2023. It's absolutely crazy. And quarter by quarter, this is where we get a better look of what's kind of happening now. This is where we were talking about the flat in lending and how that's kind of affecting the business of the company, right? We can see in Q4 2023 and Q1 of 2024, very profitable on the top end and the bottom line, right? And then we saw a regression in Q2, and that's because they're not putting out as many loans. They're not issuing to a lot of lenders. They're being very, very safe with who they're issuing loans to, right? So we got to take that into consideration with these Q3 numbers coming up. But Wall Street is expecting a huge beat for Sofi stock. Guys, look at this company, man. So we did 2 cents in Q4 2023 and Q1 2024. We came back down to 1 cent in Q2 of 2024. But Wall Street is expecting 4 cents of EPS. That is a huge increase in profitability from the previous quarter in Q2. 1 cent to 4 cents, that's a big jump, right? So Wall Street analysts, the 14 that are covering Sofi stock, are really thinking Sofi is going to knock it out of the park. Revenue turns into profits, hopefully, right? Analysts are looking for earnings per share of 11 cents in 2024 and 26 cents in 2025. And we can kind of confirm that with the sales growth of 15% by these 14 analysts, right? Going from 2024, 3.48 billion, high estimate of revenue, to 3 billion. The average is coming in about 2.45. And next year coming in at 2.82. And one thing that Anthony Noto always does, investors, is under promise and over deliver. So in 2025, I'm expecting on the high end over $3 billion in revenue. And that's really going to translate to the bottom line, right? Going from what this article says, right? 11 cents to 26 cents. That's more than a double in earnings per share, right? So we're getting twice, more than 2 times more profitable in 2025. So I think SoFi stock is set up for a great 2025. Now, what everybody wants to know, where does the stock go from here? We're trading in the mid $8 range. Earnings is coming up in the next few weeks. So I'm expecting a run up to $9, depending. If we come in at the 4 cents, I expect the stock to go over $10 per share. How high can it go? Nobody really knows. Could we hit $11, $12? Maybe if shorts start covering and having to buy back their shares, and there could be a little run up on the stock. Will that last? That's a good question, right? Because any run up we've seen post earnings has been immediately sold off in the weeks after the run up, right? So it's a very confusing time for investors who want to be long SoFi, right? Trading the stock has been the better play, right? You sell the upside tick going into earnings and after earnings, and then you probably sell puts 20, 30% lower over the next 3 to 6 months and get your shares back cheaper. Rinse and repeat and become profitable, right? But I'm a long-term investor. I got my 4,000-ish shares, and I'm starting to nibble a little bit more now, because it looks like Wall Street is expecting big things from SoFi stock. And the institutional ownership is getting closer and closer to 50%. We really want to see that institutional ownership over 50%. Right. So in the next 12 to 24 months, I'm saying my 12-month price target from next earnings, so next October, not this one coming up, obviously, but the next one, I'm saying a $15 price target, right? Could it be 2025? Hell yeah, that would be awesome, right? I could dig a $25 price target. We all make some money, buy some cars, buy some houses. We could all dig that, right? Especially the people who are owning 10,000, 20,000 SoFi shares, right? But I do think positive things are moving forward for not only the company, but the stock. I think this company will do better in a lower interest rate environment. And like I was saying before, that refinance revolution is upon us, guys. So maybe getting in now is not a terrible idea. Or you sell some puts in that $6 to $7 range over the next 6, 12, 18 months. I think you can make some money doing that as well. That's my plan going forward. So October 2025, $15 price target for me. If you like these kind of SoFi updates, make sure you hit that like button and subscribe to the channel. We appreciate you guys tuning in. We'll catch you on the next video. Peace.